Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, private equity groups poised to own 1 in 3 top US accounting firms. As well as that, Rishi Sunak pledges £17 billion in tax cuts to revive Tory election bid. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get into it though, make sure to subscribe. But the first article to talk about is to do with private equity groups and accountancy firms. Now, the top 30 largest US accountancy firms are now increasingly falling into private equity groups' hands, with 10 of the 30 largest US accounting firms being set to be managed by a private equity group of sort. This comes as 4 different groups hold important deal talks following the sale of Grant Thornton and Baker Tilly. Now, of course, we've been talking about private equity extensively recently, as things have really kind of started to heat back up, I think, within the private equity industry and with private equity groups, as of course we do start to emerge out of this kind of period of high interest rates. And whilst, we haven't yet seen that first interest rate cut from the Fed, maybe today, but that's very unlikely. But ultimately, yes, we haven't seen an interest rate cut yet from the Fed, but I think things are starting to heat back up. And in the private equity kind of scene, anyway, as ultimately individuals are starting to expect those interest rate cuts, mid this year, and we're starting to see rate cuts within the Eurozone, for example, and that's expected to be the same in Britain. So, things are definitely heating up with regards to the kind of macroeconomic climate. And additionally to that, of course, we're seeing that kind of increase and that kind of revival in the IPO scene as exits start to come back onto the table for private equity groups. That does not mean, though, that these past months and the past year has been a good time for private equity firms. And in fact, in our most recent video, I think, on the private equity industry, we noted how ultimately the kind of exit opportunities for private equity firms were still so minimal. As a result, it's hard to kind of get that cash back to those key investors for these alternative investment groups, such as private equity firms, and ultimately, therefore, it's hard to kind of keep things running in the same way that we might usually see within a private equity group. And as a result of that, private equity firms are holding on to large amounts of companies which they're looking to sell, but they're kind of not able to. And thus, investors are in and they want to leave, and new investors want to get involved and they can't. And whilst we have already noted kind of a few ways which private equity groups have got around this, for example, through kind of introducing kind of these grey market sale opportunities where they're kind of investors are selling their share in the private equity group to another investor, and that's how kind of investors are withdrawing their cash. And we also know that kind of private equity groups are doing these kind of private sales and stuff with their own unsold companies to try and get some money flowing back into the private equity group's pockets and back to investors. So that's been some of the ways that things have been developed. But ultimately, as I just said, not much has been happening, despite the fact we're kind of re-emerging into this kind of time of lower interest rates. We're still not there yet. Of course, we're still at very high interest rates, but as things kind of start to calm down, we can certainly see that some things are picking up, and in some areas things aren't picking up for private equity groups. What this article though does kind of note, and actually goes into detail, quite a great deal of depth, is the kind of topic of these accountancy firms within the US and how private equity groups are starting to kind of get their hands on them. And this is a kind of interesting industry to kind of look at with regards to kind of private equity acquisition, as of course these US accounting firms or accounting firms across the world really do specialize in this kind of corporate level audit and kind of tax management. And whenever we start to see certain financial institutions then acquiring these very large accountancy firms, which of course have a great deal of kind of importance to kind of the administrative aspect and kind of HR aspect of these top companies, corporations, banks across the world, things definitely do start to get interesting. And, as we'll get into in this article, certain regulators, for example, have already started to voice their concerns over the fact that basically now 1/3 of the kind of top 30 private equity groups are going to be somehow in the hands of these private equity firms, which is kind of a crazy thing to imagine when you truly think about, the ownership of firms usually, which are usually placed within, of course, partners' hands who have been in the business for a while, worked hard and understand and care for the accountancy firm that they're, of course, looking after and help running. So bringing into the space, private equity groups, which of course are focused on that kind of 1 year to 5 year profit kind of timeline, where you're churning in that profit, you're engaging in a large kind of growth, and then selling after those kind of 5 years and returning cash to investors. It'll be very interesting to see how that dynamic does kind of change things within these US accounting firms, which you would traditionally think would operate on that more kind of traditional kind of timeline, which is looking at the longer scale of things and operating in kind of these more traditional and classic manners that we would think about top business engaging in. So it will be very interesting to see what does come of this, with the acquisitions of the 2 top 10 firms causing other buyers to move towards other top 30 firms. This would of course allow for private equity groups to massively increase their influence over the accounting industry within the USA, and thus has spawned some questions. Now both PKF, O'Connor Davies, and Carr, Riggs and Ingram of Alabama are engaged in active conversations with investment banks over the question of selling their business. Additionally to that, the Californian-based 19th largest accountancy firm in the US, Armanio, is now in talks with private capital providers to discuss selling a minority stake. According to key investment figures interviewed by the FT, partners within the accountancy industry are waking up to the fact that there is leverage to be had within the capital markets, since the capital needs for firm has ultimately risen. This has ultimately meant that 1 in 3 of the top 30 accountancy firms in the US has either taken or is close to taking private equity investment. Regulators have expressed concerns over this matter and have said that this could change the tone at the top for accountancy firms and thus affect the quality of audit work. So, an interesting point there made by those regulators over how this might change the kind of accountant culture, how this might affect kind of the clarity and the safe assurance that usually an accountant firm does kind of offer with its auditing process and that kind of thing. As when we do start to kind of see these financial groups starting to acquire other financial groups within different industries, but somehow related, certain questions of systemic risk and kind of the question of whether this is creating some potential conflicts of interest do obviously arise. So that's why it's important to kind of note what the regulators are of course thinking about this topic. Interesting article nonetheless, and definitely keep your eyes on the private equity scene as always. Next article to talk about though is more to do with the political scene of the UK, with Rishi Sunak pledging £17 billion in tax cuts. Now Sunak has now pledged a total of 17 billion plus in tax cuts in a new effort to revive his failing election campaign, which is being dominated by the Labour parties. This comes as Sunak announces his 76 policy plan, which is of course a manifesto, which he promises will help small-scale entrepreneurs, pensioners and first-time home buyers. Now, of course, recently, it was announced essentially that the UK's general election will be taking place within July. Interestingly, of course, we noted in yesterday's morning market briefing, and I think also in the weekly market briefing, that of course Macron has called his own snap parliamentary election. So of course we'll have 2 of these very important European elections, actually northwestern, Europe, of Europe, election elections basically going on at the same time, which will be very interesting to see in understanding how different voters are of course looking at the economy, and how different parties are of course looking at the economy. Is that always the kind of key thing that we're thinking about with these parties obviously pledging their own kind of economic plans, and that's what we've just received now from Rishi Sunak. And of course Labour has submitted their own, Reform UK the same, but of course Labour is dominating in the polls, but it's still very, very important to understand what's going on with the Tories' own manifesto, especially when it comes to tax cuts, as these are the kind of things which of course attract business, or maybe even push away business, and the likelihood of one party being elected over the other then also affects the way that traders are going to perceive who's most likely to get into power, and then who's going to implement what kind of policies with the economy wise, and all of that of course affects markets, which is why we kind of talk about what's going on within the political scene, what's being kind of pledged, and that sort of thing. And as we can see here, of course, Rishi Sunak has now come out with his own pledges to do with tax cuts. Now, we have spoken about tax cuts from the Tories before, largely talking about the kind of limit that they've had to actually make these tax cuts, as of course, a lack of growth and certain issues with competitiveness has weighed on the Tories' ability to actually make these larger tax cuts, which we might usually see from them. Here, though, despite that, Rishi Sunak has found a way to kind of pledge this 17 billion in tax cuts. Interestingly, using by funding that of course through other cuts in other areas of spending, that primarily being in welfare. So it will be very interesting to see how things do play out, of course, with the key tax move being funded primarily by cutting spending in areas of welfare, as I just said. Sunak, however, has been under immense pressure, not only from the left with Labour Party, but leading in the polls, of course, but also from further on the right with Nigel Farage and Reform UK. Many MPs and political analysts still think that this won't be enough to defend the Conservatives from both Labour and Reform UK in this election. Sunak promises to abolish the main rate of self-employed national insurance and also make a 2p cut to national insurance contributions. Add to that his other promises, such as promises to protect pensioners from tax, of course, and the other promises to do foreign policy and kind of domestic security and that kind of thing. So all very interesting things to note there to do with election campaigns, and it'll be interesting to see when Labour does come out with their own promises to do with the economy, and understanding then who might implement what and what's going to affect the economy in what ways, and then it'll be interesting to see how markets then do price that in depending on the polls. So lots to think about there to do with Rishi Sunak and the election in the UK, but that's all to cover on the articles. Next to talk about is the charts, of course, like always, where if I can just reverse that, where like always as well, we're starting on the US 30, the Dow Jones, more broadly talking about US indices. Now, of course, the US 30 has been in an interesting position to start off the week, being situated just around this key area of liquidity, ending off last Friday and then entering the week. Of course, on Monday and then Tuesday. Over the course of Tuesday, though, interestingly, price finally sold off from that area of liquidity which price was hovering at over Monday, if you remember. So price has finally sold off from that key area, dropping to this lower area of liquidity, this lower level of liquidity and key area of support, which has previously acted as a key area of resistance, which is why it was a key area, and we dragged that across and we noted that out as a key zone which price might interact with. So price has now interacted with that level. Price spiked into that level and then came out that level in quite a significant fashion. So price is now currently hovering around that 38,730 mark. That said, the kind of movement that we're seeing from the US 30 is one which represents this kind of ranging motion where not much is really happening. If we just think about where price is currently when I'm making this video, of course, price is at the same level that it was at on Monday at 7 o'clock. So basically, when markets kicked off on, Monday. So price really hasn't moved much over the week, but as I kind of noted on Monday's weekly market briefing and Tuesday's market briefing, it's likely that we're not going to see much moves until some key US economic data which comes out, which of course is coming out today with the US inflation figure as well as the Fed's interest rate figure. So that's why markets have been moving sideways. And of course, those two key pieces of information will greatly affect the US 30 and push either the US 30 to the upside, breaking above this key liquidity zone, making its way up to the kind of the 6180 area, or pushing price down below this key area of liquidity and back down to these lower levels last seen around the 30th of May, or even lower than that, back down to levels not seen, of course, since the start of May, the 1st of May. So key moves to be had today with the data that is coming out, and leading on from that, of course, the dollar is important to kind of cover, as this is another kind of asset, a financial product, tradable asset that, of course, will be moving with great volatility today with such important data coming out, such important news coming out. As of course, whilst we have been expecting the Fed to cut interest rates maybe September or August, so not this month, ultimately, from what we've seen over in Europe, with the ECB firstly being the first of these kind of Western central banks to cut interest rates, this does kind of weigh, I think, on the Fed's mind somewhat, and definitely could increase the likelihood for the Fed to cut their own interest rates this meeting. Add to that, of course, the inflation figure that we're receiving today from the US, which will be coming out just before the Fed's interest rate decision. That kind of anticipation, that kind of importance and significance of that data will definitely be creating this volatility. And the key areas that price, of course, interacted with over Tuesday was this higher area of liquidity, which price finally reached and has now sold off from, as one would expect. So it'll be interesting to see how price does react to these levels over today, as of course, either price is going to break above this key liquidity zone or break back below and into this key ranging area that price was in over the course of end May. Lastly, the next to talk about though is the Euro USD, which is an asset which, of course, as I've already noted with the dollar, will be moving greatly today with the news that's coming out from the Fed, as well as, the CPI figure. But ultimately, at the moment, price is sitting within this key liquidity zone, which price first interacted with on Monday. And we noted that, of course, in yesterday's morning market briefing, we were kind of noting or expecting price to possibly retrace back on itself and make its way up to 38.20 in kind of preparation for the data that we're receiving today. That has not happened, and therefore it'll be we'll have to just wait and see to see what does happen with Euro USD today, as prices kind of within this weird territory where we can't really note out key areas which price may interact with, but of course we'll have to wait and see what does happen. Next to talk about though is pound yen, which is kind of moving sideways but still to the upside, not making any key large moves, but still is very much nearing these all-time high levels once again. So it'll be very interesting to see whether price does kind of finally breach above the kind of 200.5 level today, if we can find that momentum, if that momentum can come back into the market, as we are receiving some important British data today, including the British GDP figure, British balance of trade figure, and also the British industrial production figure. So three very important figures which I think could definitely either influence the pound to break above or break back to the downside and return to these lower levels of liquidity. So definitely keep your eyes on pound yen, as pound yen does remain above 200 yens for a pound. Next to talk about is Bitcoin, which actually took a swing to the downside over Tuesday, as price was kind of hovering at the start of the weekend, over the weekend, just above this 50% Fibonacci retracement level. And instead of price using that kind of a liquidity area to push to the upside, break back to the upside, instead we've seen price drop to the downside, falling into this key liquidity zone that we've of course seen price interact with both on 31st of May, 23rd of May, and even the 20th of May. So this is a key liquidity zone which price has now returned to. So it'll be interesting to see how price does play out after interacting with this key zone, with the Fed's interest rate decision today obviously greatly affecting Bitcoin, as of course Bitcoin is kind of used as almost a safe haven asset or a hedge against the dollar often. So that decision will of course weigh on Bitcoin's movements as well. Next to talk about is gold. which is in an interesting position, in the lead up to the interest rate figure and FOMC predictions that we're receiving today, as well as the inflation rate figure, as price very much nears that 3820 Fibonacci retracement level, which lines up with this key liquidity zone. So a very interesting and important liquidity zone and retracement area, which price could definitely make its way into and then sell back off to the downside and continue to the downside, or in fact, depending on the data that we do receive today, could in fact then break back above this area of liquidity and return back within this range. Lastly to talk about though is oil, which is just continuing this push to the upside seemingly, over which we've seen since the 4th of June, so over the past week or so, 2 weeks, but now is kind of holding above the 6180 Fibonacci retracement level. So it will be very interesting to see how long price can stay within this kind of higher range territory, as of course the kind of fundamental news has pushed oil to the downside recently, as a result of kind of changing demand levels and supply levels. So definitely keep your eyes on oil. That's all to talk about on the charts though. Lastly to talk about is the economic calendar, whereas I've hinted to, we're receiving lots of very important data today, so I'll get straight into it. First, you're receiving the Japanese producer price inflation figure, as well as the Chinese inflation rate figure. So as that, we're receiving the German inflation rate figure and the British GDP and balance of trade figure. Followed by that, we're receiving the British industrial production figure, as well as the US mortgage applications data. As well as that, and most importantly, we're receiving the US inflation rate figure, as well as the Fed's interest rate decision and press conference with FOMC predictions also being released today. So much important US data being released today, and that's the kind of key thing to listen out for. And we're first going to receive that inflation data UK time at 1:30, so definitely listen out for that data. But that's all from us at Wildwood Capital. That's all on the economic calendar to cover. We've covered lots in the articles, lots in the charts, and lots in the economic calendar though. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.